Welcome back to the Mom and Kid Show. I am Daniel, one of the kids.
I am Damien, the other kid.
And I'm Araceli, the mom. And today,
We will be talking about income taxes.
yes,
Yay.
I don't know.
income taxes. And it's a really interesting topic, like all of our topics.
All the topics.
Yes.
Yes.
All right. We're going to get right into it because it is a lot of information.
Lots.
But before we do, go to 7streamscashflow.com and you're going to find fun activities. And every episode that we are making has an activity attached to it. Today's activity, the kids, they get to simulate a tax return and kind of see how that plays and see other tax forms that they should be getting familiar with.
Again, that's 7streamscashflow.com.
Written out, 7streamscashflow.com.
And
there's
you spell it 7streamscashflow.com.
And there's also a money tool if you need help managing your finances. Okay, let's get started with our fun segment. Who wants to go first?
I think we already know.
Okay. Who wants to go first?
Damien?
You want to go first?
No, you go first.
I would get joke.
Okay, Mom, go first.
Okay, let me find my thing. Okay. My interesting fact. So money actually has different names. Has some odd names around the world. It has, in some of the terms used to describe money include cheddar.
Moolah.
Yeah, but yeah. Moolah, I guess. I didn't know if you were talking Spanish or English. Cheddar, toad in Denmark.
Toad?
Toad. Can you give me some toads, please? I don't know how they talk.
Can you give me some toads,
They're
please?
not
Pasta in Spain.
Pasta?
I guess they really like pasta.
Lobster in Australia.
Lobster?
What is it with food?
And mosquito in Germany.
Mosquito?
Yeah. Can I have some mosquitoes?
Okay.
Y'all can, Germans can come over to, Texas because we have a lot of mosquitoes
They'll
here.
be rich.
Y'all
I
can take
know.
all of the mosquitoes you want.
And toads.
We'll be
They
happy.
could
And
leave the
toads.
pasta and lobster.
Yeah.
Yes.
And cheddar.
And actually, you can take lobster. Not a big
Cheddar I heard, but the other ones I hadn't. So that
I
was
hadn't
pretty
heard
interesting.
any of them.
Okay. Who wants to go next?
You.
Rock, paper, scissors. Whoever loses has to go first. Rock, paper, scissors, shoot. Oh, rock, paper, scissors, shoot. Rock, paper, scissors, shoot. Rock, paper, scissors, shoot. Oh,
Okay,
I'll
go
first.
Daniel.
All right. Don't look at my screen. Don't look at my screen.
Oh, and today we're eating.
Pizza rolls. Or-
They're Totinos.
They're the same
Totino.
things.
Oh,
They're like
I
little-
guess so.
They're
Okay.
like mini Hot Pockets.
Okay. In order, no, this is my shower thought, my interesting thought. In order to fall asleep, don't look at my
I'm not
screen.
looking at it.
In order to fall asleep, you have to pretend to be asleep.
I know. I heard that, and then it's like, so in order to be millionaire, you have to pretend to be a millionaire.
Gosh, here we are taking things into like.
I mean, you get
millionaire
it because
mindset.
it's like.
Hold on, let me find mine again. Let's see.
Okay.
What is mine?
But wait, that is crazy though.
Like-
Do you
like-
even notice when you fall asleep?
Do you even notice like, cause you don't just are awake, and then you're like,
I don't know. It's
Oh,
like
just
you
a moment.
decide.
do you close your eyes before, and you're like,
And then you just fall
then
asleep.
you fall asleep.
A slice of apple pie costs $2.50 in Jamaica. It's a kind of fact, but I don't know if it's a real fact. It's a joke mainly. $3.75 in Bermuda and $3 in the Bahamas. Did you know that? Those are the Pirates of the Caribbean.
Oh my god.
I don't get it.
Here, I have another one for you.
No,
to get.
don't you get it like the pie?
Oh, the
Pirates?
pirates. I get it.
Okay.
Here, hopefully you'll get this one. Why wasn't the cactus invited to hang out with the mushrooms?
Because you would squash them.
Because he was pokey.
No, he wasn't a fun guy.
Oh my god. You get it? Because it's like
Yes, I get that one.
All right, let's get into, okay, before we jump into our income tax return, I have a question for y'all. Y'all,
Yo.
why do you think our family's growth in faith, money, and skills matters for more than just us, but also for the people we're called to impact? Why do you think our family's growth, and we're growing as we do these podcasts? I'm teaching you guys, and we're growing, all of us learning how to do this podcast, learning how to run a business together, learning about money. Why do you think it's important? We're growing in faith, matters for more than just us, but also for the people that we're called to impact.
Because it benefits them more.
Yeah, but why?
Because they get to learn more.
Why do you think it's important?
For us to grow.
Wait, can you repeat the question?
Why do you think our family's growth, that we're growing, matters for more than just us? Like, we understand why we're growing. I understand why I'm teaching you guys, right?
So other people won't have to struggle learning.
Okay. I like that. So we're kind of like making their growth. So we're taking, for example, if we take a week to learn something, they learn it in 1 hour. Right? Yeah. I mean, we're cutting their time. Like,
And
we're
either
learning.
way, we're gonna take a week to learn it, so might as well help other people.
Yeah, because I mean, that's we want to grow, right? Well, you guys say yes. You guys.
Yes.
You guys want to learn. But I like that response, Damien. Danny, you want to add anything, or we're good?
Maybe if you want to add a 2.
I was gonna say. Hold up. How do I put this into words? Because, I mean, what he said, but not about knowledge, about like wisdom in the family. Like they see us as an example, and they're like, "Oh, how are they doing
We're hoping
this?"
they see us as an example.
Yes, we're hoping. And it just like, I don't know how to explain it.
I think. I think I know where you're headed. As we grow in faith, as we grow in personal development, as we grow in business, money skills, as we grow, I had lost my train of thought. As we grow, we become closer.
Yeah.
We become closer because there's stuff that is uniting us. There's topics that we can conversate about. There's things that we can actually like have more deeper conversations, or but it's just, when we grow in faith and more in that spiritual part of us, like, we get closer as a family. And I think that's why it's important for us to continue doing this. And that's why we're doing this. That's why we're doing the Mom and Kids Show. That's why we do the Visionary Youth Accelerator. Because as we grow, we become closer, and we want to be, like you said, that example to others and to other families, that, hey, in a world where they're trying to keep us separated, it's so important to have things in common and things that you guys can chat over dinner, or some over totinos, or whatever. Okay. Anything else that you guys want to add before we jump into the fun part of this? No? Okay.
The fun part.
We'll see about that.
Hey, it was interesting.
Okay,
I mean,
maybe we won't have to see. Maybe we'll just think about it.
yeah.
The camera's over there.
It's seeing us.
Okay. What are income taxes?
Taxes that come in.
Taxes that
Ta-
income, like they're coming in.
It was not that funny.
It's incoming to the government.
You're
On
laughing
the government
more than
side.
my joke for some reason.
It was not that funny.
Yeah, I thought it was funny because it is coming into the government.
I mean, more.
So
Why is it not called outcome taxes?
It's
these are the
it's
shower
taxes
thoughts
that you
I
get
did.
taxed on your income. So like if you make $100 from working somewhere,
They
you
get
get
30.
taxed out of that.
They get 30% of the thing for some reason.
30%. What do you come up with 30%?
Literally.
So what have you guys heard about income taxes?
I literally just
Nobody
saw.
likes them.
I literally just saw a video about that earlier. Income taxes.
Yeah. I wonder why. Yeah, income taxes is money we are paying to the government for money that we made. So income is any money that you generate, that you earn, and you pay a part of it to the government. How much? It depends on how much you've made.
Let's say you make $100.
Well,
Depends on the
you have
state.
to make over 600 to
Let's
have
say
to file an income tax return
$1,000.
$600
per the year.
per year.
If you make over 600, then you have to report it to the IRS.
Per year.
Like if you make 600 or more dollars, more than 600, you have to file an income tax return.
So if I ran a lemonade stand that I made over $600 a year,
I think there's age also.
I'm 21.
You would have to file a tax return.
You would
Even
not
if
be.
it's just a lemonade stand.
You would
Even if
not
it's
be
a
running a
lemonade.
lemonade stand.
You don't know that.
Maybe helping a kid run it. I don't know.
He could be running one at that age. So
Yeah, we don't lemonade shame here, Damien.
What?
lemonade shame.
That was not that funny, but okay.
Okay, so it's money that we pay to the government. History of income taxes. So the early U.S. got money. The government got money from tariff. What are tariffs?
Tariffs?
T-sheriffs.
I don't know.
They're taxes on that they charge for importing goods, importing from another country. So they were getting money. We were taxing money on goods that were coming in from outside.
So you would get
Other
taxed
country.
if you ordered something from like the UK?
Yeah, well, I don't think they did per person, but it was like bigger shipments. And so they were charging. And so that's how they were getting money. But in the Civil War era from 1861 to 1872, money was needed to fund the Civil War. So they're like, the government's like, how can I get more money? So they started charging people a percentage so that they could fund this war. And in 1872, they were like, it's not right. So they took that. It only lasted for a little bit. It only lasted for 11 years. In 1894, there was another attempt to do it. Government tried again to tax the people because they saw that it was like, oh, we're getting money from these people that are working. So they did it again, and then the Supreme Court said it was unconstitutional. It's like, nope, that ain't right. There in the Constitution, it does not say that you can do this. So what does the U.S. do? What do they do with the gold, with the money that was backed by gold? They just decided, right, that, hey, they just made a decision.
Let's just print more money.
I have
Yeah.
a question. If governments can just print money, and like those people can just, not people, but like certain people can just print money with machines, right?
Mm-hmm.
Then why do they still have to charge people?
That's a good question.
Charge people for what?
For taxes, which is literally no reason.
Because the value in America doesn't change. It's like, totinos, let me just cut them in half. Oh, we need more? Cuts them in half again. There's still one whole totino. There's just multiple parts to it. There might be $1 trillion or $2 trillion, but it's only worth so much.
Okay, so what does that have to do with this question?
He's talking about why if people can just print money,
Not people. There's agencies that print money, or the banks.
the banks.
Mm-hmm.
Then why do people have to be charged, right? Like, why do people have to pay?
I hear what you're saying.
I don't even get what I'm saying now.
I think that's a very good question because it is something that
Look,
a lot
this
of
is
people
how it
question.
is.
It's like, why? Because, I mean, local governments can't really print money. It's more printed, on a federal level.
Look, this is
But I do think that there's something
how
something there.
I get it. So look, this totino is all.
Our money became totinos today. Hey, this goes with my fact that it's totinos.
So look, this is all the money in America. If you make $2, and there would be 2 pieces of totino in America, so you would just cut it in half. So each one has less value, but they're still kind of like the same value.
I
I
still
think
don't
another way,
understand what you
a
guys are
tube
trying to.
of toothpaste. This just has to do with the value of money, about printing money. You don't value it when there's a lot
I see
of
what you're trying to do
toothpaste.
now. We're trying to.
But then you get down to this much and you're squeezing it out and you're like trying to do very little drops so it'll last you until tomorrow.
So look,
The less there is of something, the more value it has.
Look, so this is what he's saying. Look, I cut this one into eighths. Let's say that something cost 1/8. If I cut it into more pieces, then it's still gonna cost the same amount.
Yes, but I think that what you're trying to ask isn't about the value of it. You're asking why, if they have the ability to print money, they're asking us to pay for it
Yeah, because if
because they can make more. And I think it goes deeper into, you know, like the property taxes. They only they charge it because they charge you for the property taxes. It all started because they wanted the king and the royalty wanted to remind like the peasants, I own this land. That's the only reason why they wanted to charge taxes. And when they came here in the US, it was like it's the government's way to say I can control you. You pay me your taxes or you lose your property. So I know, like I can see where you're going with that question. I think it's a deeper question, and I think we should have a segment about it because it is for you guys to understand what the government will tell us that they're doing with the money compared to what people believe.
So the government started doing income taxes to help fund the Civil War. But then they were like, let's hope they forget we keep doing this.
Yeah, but then they took it was
so
revoked.
it's like this. Look,
Because it was unconstitutional.
It was revoked the first time after the like in 1872. They were like, when the Civil War ended, they're like, you know what? No, this is not going to happen. So it was repealed, revoked, and then in 1894 they attempted again, but this was
Unconstitutional.
this was whenever they were like it's unconstitutional.
So
The Supreme Court said it was unconstitutional.
So this is what I'm getting. So look, if it costs, let's say, a half a totino for this.
Oh my gosh.
But look, and they cut it in half because they make $2. It's still gonna be the same price. There's just gonna, because money's gonna have less value because there's more to go around. So once they cut it into a bunch of pieces, they only have so many pieces, and it's like less valuable. So that's why they have to start taking away from people, because if they print money, then it'll just get less value.
It's what they told you. They tell you taxes go to certain things, schools, libraries, and we'll talk about a little bit about that. But I also think, and another point is if they print too much of it, there's so much of it that it loses value. But I do, on a personal level, I do think that it is more of a way to keep people busy.
But
and because it's how it's set up. But we're not going to talk into much of that. We have a long thing to go to. We'll have to make an episode about that, okay?
yeah.
Write it down, remind me, and we'll do an episode about that. So in 1894, they tried it. And then since the Supreme Court said it was unconstitutional, they came out with the 16th Amendment, which says, which gave power to the government to charge income taxes. So this is where it's like,
Bruh, the government can just do whatever they want.
Exactly. So first, it was a very low tax. It was 1% only. Mostly only wealthy people paid it. But in the World Wars between 1971 and 1945, the government raised taxes, the percentages to raise money for World War I and II. And by World War II, it included most working Americans. They were taking, and that's whenever they started doing the taxes from paychecks. So every time you get paid through a paycheck, through an employer, through somebody that gives you a W-2, and you guys will get a chance to see it in one of the forms that I sent you, they already take the taxes out before you even see your money. So you're getting a check with already taxes, with the government being paid first. So keep that in mind when you get your checks.
So you don't feel bad, or so you're not mad at the government.
So, and then, modern income tax, it's the largest source of revenue for the federal government.
Isn't it crazy that the government charges for people spending money but also making money?
Yeah, well, the sales tax is on a local level, on a state level, compared to the income taxes, which is a federal level. What is federal? Nationwide. It's the whole U.S. Okay, the more money you make, the more money they charge you. So let's see. So forms. The forms for the tax return is you pay annual. You do it annually. It's going to be a 1040. That's what the tax return is. The form is called a 1040. It's mainly the one everybody uses, but there are different ones. The 1040X is the one that if you file your taxes and you make a mistake, you have to do a tax return amendment, and that's the 1040X. So you can fix your taxes after you submit them. Something's wrong, you forgot that to include something that's going to make a huge difference. You forgot forms or whatever, then you do a 1040X.
So what don't you get taxed on?
What do you mean, what don't you get taxed on?
Like all of your income from everything? Like if you
Any income that is earned, yes, sometimes, and they also tax you. We're talking about the income tax, like the income, like money, but there's also like if there's a inheritance, sometimes that's taxed at a different level of taxes.
Imagine that's taxed?
Yes, if it's left in a way that, like if you just make a will, like if just a paper that says I want to leave my family this, you will pay estate taxes on it. And that's why a lot of people want to make trusts, because if you leave a trust,
you don't get taxed.
You don't get taxed, and it becomes much easier. Okay, we're going off topic here, guys.
Okay, one more question. If you win like the lottery, do you get taxed on that?
You do. Oh. So the jackpot, that's why whenever you you'll see the paper, it says cash value is what you get, not what the real the whole value of what they end up giving you. Okay, so there's a 1040, the 1040X, the 1040SR is for seniors, and then the 1040V is for the payment. So after you've done your taxes, if you go the government money, you will be sending a 1040V, which is 1040 voucher for the payment. And then there's others. There was like 2 other ones that I had seen, but that they're not using as much. Okay, what you need to file an income tax return, you need you'll need like your names, your social securities, or I-10s. I-10s is for people that do not have a social security. You need to be legal here in the U.S., be a resident, or have some form of documentation.
Do you get taxed if you're not here legally?
If you're not here legally, you have to apply for an I-10.
Mm-hmm.
And they will tax you. But and if you have an I-10, you don't get several of the credits that people with Social Securities get. So, but they still do have to pay taxes. So you'll have that information, you'll enter in your address, and then we move on to the income. And for income, you'll receive a W-2. And if you look at the paperwork that I had sent you, you have it pulled up.
I have it pulled up.
Okay, the first one's a W-2. That's what the W-2 will look like. It'll
Are
have,
these on your website?
yeah, these are the ones that are, the whole PDF file will be on the website for you guys to see what the W-2.
Why would you put an employee's social security number?
It's not, it's a fake one. This is something that I got from it's a fake one. So, you'll have the employer's information, then the employee, which is you, their address, and then yours. And then on box 1 is how much you made, the total amount. And then in box 2 will be how much federal income tax was taken out.
So it's about like 8% or something. Like is it the 8.25% for here, or what?
No, that's for sales tax.
Oh right. Looks about the same. Okay, continue.
And then the Social Security tax that was withheld, and the Medicare. Give me 1 second while you guys look at that. You have questions or?
Why is there two things?
To what?
Like 2 boxes with separate addresses and zip codes.
It's your company.
No, because
your
it says
employer, and then you're the employee. The employer is the person who employs you.
Oh, okay. Makes sense.
Okay. Okay. So. Where was I? Okay, so that's the W-2 that your employer will give you at the end of the year. That's what you're going to take to your tax preparer or use for your taxes. Now,
how often are you supposed to pay income taxes?
The income tax return is every year.
Every year?
Yeah.
Is that tax season?
Yes, that's tax season. It's from January till April 15th.
Is that what you used to do at,
yeah.
Whenever you were bookkeeper?
No, whenever I worked as a tax preparer. Oh. Yep, I file taxes. So we got the 1099. That's the next sheet that you have.
Isn't that what Matthew did in the Bible?
They charged taxes, yes. Yeah. But before, I guess they took a little bit more because, I mean, they were the ones charging people. So they kind of, I guess they made it a business. So the next one is the 1099, and those are forms that you're gonna get as if you're a contractor or contractor, and you're working for someone. You're not an employee, which means you don't have to report from 8 to 5. You have your own tools. You kind of do like more of what you want to do. Mm-hmm. That's the forms that they're gonna give you. That's how much they're gonna report that they paid you. It serves them because they can show the IRS, hey, out of the 10,000 that I made, I paid Daniel 4,000. And then obviously because he filed a 1099, the IRS gets these forms, and if you don't do your tax return, they'll catch up to be like, hey, why did we get one from Damien saying that he paid Daniel, but Daniel didn't report his tax return? So that's how they kind of keep the track of it.
Who paid what? Who paid who?
And then we see a K1, and this is a K1 is if you have like a more of a business structure, like a LLC, or C Corp and other stuff, and they pay you but if it's an LLC, it's set up as an S corp, and we'll talk more about this in another episode of business of legal structures. But this is what you're going to get through. So you're going to file a tax return for your business, and then you're going to get the tax return from your business is going to give you a K1, and this is what you're going to use. So this is just for your term and not for like you to become familiar with these terms. Okay.
Okay.
Let me see. And we're talking about the income tax return. Just keep in mind that some states have state tax returns, right? Texas does not have it, so people get charged on a federal level, and then they get charged on a state level.
What's the difference?
Well, one goes to the government, to the U.S. government. The other one goes to the state government. It
Oh.
funds more different things.
Do you get taxed by both?
Yep, but it's not the same. I don't know
Percentages.
how much about the state tax returns, but okay. So let's look at. You know what? I don't think I put a tax return. Okay. Well, in a tax return, give me 1 second. And then if you have any questions, you can go to irs.gov and they will have the forms, they'll have everything there for your convenience. All right, so you guys have the form. I hadn't included, but I'll include it. So you'll see at the top part of the 1040, and it also have like it says U.S. individual income tax return, and you'll see a year. You won't see like if we do 2026, you're not going to see 2026. You're going to see 2025 because you're seeing the year before. Okay. So, and then it has a filing status, which is single, married, filing jointly, whatever your circumstance is. That's what you're going to put on there. If you're single, if on the December 31st of the year before you were married or you were single or you were whatever it is, that's what you're going to put.
Wait a minute.
So
It says under standard deduction, age/blindness, are blind.
We're not gonna go, yeah, but we're not gonna go into deep into like the things. I'm just gonna cover the basic sections.
I lost my train of thought.
Okay, so
so if you were doing this for 2025, but it's 2026, and you got married in 2026, you would put single.
Yeah, because it was a year before. They're talking about the year before.
So
okay,
if you
are the head of household is a person that has dependents, has people that it's taking care of, right?
What if you were married in the beginning and then you got a divorce towards the end?
Then it would be
married prior. Well, depending if you're fully divorced,
it's
or it all depends on the situation. Then that's a tax preparer will help you.
I think
decide.
It's depending on like what you were on the 31st. No.
Yeah, they want to know what you were, but again, you have to talk to a tax preparer. This is where they're going to fill out, and depending on how they fill it out, you have a tax brackets change. So make sure it's filled out correctly. Then you have like the name information. We go into the dependents. That's if you have kids or elderly family members that you're taking care of. And then we go into the wage section of how much money you made. So let's keep going. If capital gains, if like you sell your stocks or stuff like that, that's going to be or listed there. And then they add all that income. And then you get deductions. So that's money that so you have a total amount, right? Mm-hmm. They're adding all the incomes, but they're not going to tax you on that total amount. They kind of give you like a grace amount, like grace. I don't know how you would call it, but
mercy.
No, not mercy. Like they remove like the standard deduction versus itemized. Like itemized would be medical stuff, but gets really complicated for me to like go into it. It's just they'll take money off of your total income to kind of like help you out.
That's mercy.
So I don't know about mercy. I don't know if that's the right term.
Yeah, one of the two.
But anyways, and then so your total taxable income will be different from your total income because of these deductions that governments like saying, you know what, hey, the standard of living or they I don't know.
I get you.
Yeah. So the taxable income, you'll see it on 15. That's what they're putting the taxes on. They're planning to charge you taxes on. But from there, we go into all these other ones that they're the credits and stuff. Like, so if you have kids, they give you some credits. The earned income credit or the tax credit for the child tax credit. These are all just credits. If you go to school, if you go to the university, depending on how many years, you are able to qualify for credits, which bring down your taxable income. All right. So you can start off with, yeah, you made 40,000, but then after the standard credit, maybe it goes down to 24 to 26, whatever it is. And then you have kids, so it becomes bringing it down. All right.
So you have to fill this all out.
You don't feel, well, your tax person does, but some people do it on themselves. And there's websites like the H&R Block. There's other sites that will guide you nowadays to help you. But again, you need to find someone that really knows what they're doing, so you don't have to be filing amendments, right? And then at the bottom, it has your total payment that you either owe or they're going to give you back. So if you get money back, you'll enter in your information, your routing, your account number. You'll get deposited into the bank in a couple of weeks, up to a month, 2 months, depending on how backed up they are. If you owe them, then you have till April 15th to pay them their money. If you don't pay it by April 15th, they will charge a penalty and they will charge interest for you not paying them. But if you don't get your money back, if you have a refund from them and you don't get it by April 15th, then they're not going to pay you any extra. So, and then you sign it and you send it off. You file it electronically. They get it. They look at it. If everything kind of is like, oh, I guess so, then everything looks good to them, they'll send you your money back. If it gets flagged, then you might get audited by the IRS. And they'll come and they'll ask you for the paperwork. If you have a business and you reported so much money that lost, like receipts and expenses, they're going to ask for that money. And we'll talk about that in another segment.
Another episode. We forgot our episode.
What episode number is this?
Okay, we're wrapping that up. April 15th is whenever it's due, or if not, it's going to be due on the next, if it falls on a weekend, it's going to be due on the next business day. And they have started actually with March 15th, I think, but because it didn't allow them enough time to process tax returns, they moved it to April 15th. You can file an extension. So if you're not ready, you haven't, mostly like if you have a business, people aren't ready because they have to add their expenses. They have to make sure they have all the forms. You can file an extension, just letting the IRS know, hey, I'm not ready. Give me a little bit more time. They give you until October 15th, I think. And you have that time too, but you will probably still pay interest if you owe them money. Okay?
Okay.
Some people pay quarterly taxes if they have businesses. They will pay in advance just so that they don't have to pay all at once at the end of the year. The IRS is the Internal Revenue Service. It's a U.S. government agency that collects taxes.
Mr. Krabs of the United States of America.
Yeah.
Give me back my money.
Jimmy
Okay.
back my money.
Okay. 1862, Abraham Lincoln
Was born.
created it to help fund the Civil War, but it was called the Bureau of the Internal Revenue. And in 1918, it became IRS.
BIR. The BIR.
The tax brackets depends, I guess, their percentages that depend on how much money you make. But and I have them on the sheet. The tax brackets are one of the sheets that I have included on it. And the reason I wanted to include it was because I want you guys to see. It has like the tax rate, and then it has on taxable, and then up to. So let's say you made, let's say $50,000. If you're seeing the page that I sent you,
Which page?
the first one,
The first one?
yeah,
What page?
What first one?
that one at the end,
At the end?
yeah.
Okay.
So you'll see the tax brackets. Now it says on taxable 0 to 11,600. So let's say you made 50,000, right?
What is untaxable?
Okay, let's say that you made $50,000, right? From $0 to 11,600, you will get a tax rate of 10%. Okay?
Mm-hmm.
So now we're left with 49,400, right? No. 39,400. From
What?
50,000, take 11,600 away, because that's only going to be taxed at 10%. So you're left
What
with
is untaxable mean?
38,400.
it's money that taxable income. Remember, it's the money that they're charging you taxes on.
Okay.
So at the end, after all your deductions, let's say you still have you're still reporting $50,000 of a profit of money
Yes.
that you earned. Real estate, everything's been taken care of, but you still made $50,000 that you kept, right? The IRS is going to look at it, and depending, this is for a single taxpayer.
Okay.
So from $0 to 11,600, they're going to charge you 10%.
Okay.
Okay, so that's
11,600 is how much you make.
up to, yes, taxable
Okay.
income. We have 50,000, right?
Yes.
50,000. So out of the 50,000, 0 to 11,600 gets taxed at 10%. We have 39,400 left. Okay?
38,400.
38,400.
Yeah.
Okay, 38,400. Now, from 11,601 to 47,150, it's going to be taxed at 12%. So you have 11,600 charged at 10%.
So they split your money up.
Yeah, plus whatever 11,601 up to 47,150 is, it's going to be taxed at 12%, and you're still left with the 47,151 to 50,000, right? That's like, I don't know how much that's, 2,000 something, right?
What? Hey.
50,000 minus 47,151. Okay, we're gonna use a calculator because
2,849. 49.
Yeah, because 151 I put.
What'd you put? 151.
So we're left with 2850, 2849. 28 that is going to be charged at 22%. So they break it up into segments. It's not like a lot of people think that, oh, it's 50,000, they're going to charge me 22% on the whole 50,000. No. They're going to break it up, and the more money you make, yes, it's a higher bracket, but it's only that percentage of
So if I had $15,000, I would only be taxed 10% of 11,600.
And then
the rest of it would be 12%.
So isn't it smart to like
Can't you get it to where like you get
just open up a bunch of different accounts and then split your money up to where it's barely over 11,600?
Because it falls on your Social Security. Everything falls in. Like you
What
have
if-
4 or 5 businesses, they're all gonna come.
What if
be
I get
combined.
multiple?
Oh.
What if I get multiple paychecks?
What if I give some to my family.
They
put
have to
someone-
report it. So I mean, at the end of the day, there's a lot of strategies that you can make, especially if you
minimize
have a
it.
business. But that's the reason I'm showing you is this is the tax rate. This is how the tax brackets work.
Okay.
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 All right. The last thing I want to wrap up is Romans 13:6-7.
6, 7.
Is for because of this you also pay taxes, for they are God's ministers, attending continually to this very thing. Render therefore all their due, taxes to whom taxes are due, customs to whom customs, fear to whom fear, honor to whom honor. Romans is Paul's telling us, I think it's Paul. Romans it's telling us, hey, pay your taxes.
Because
Sometimes I look at it, you pay less up to 20% or around there of every dollar you make. But you live in a country where it's a little bit more secure, and there's freedom. And so sometimes there is a cost to it. And I don't know. It's telling us that we pay taxes. We have to pay taxes if that's what is being required of us to do. We do it. And
As long as we can protect
and
our
make
land.
make good, like, be very savvy and be strategic and get knowledge. Learn how to save taxes on your business. Learn the workarounds. The tax system is set up for the rich. For the people that know how to use the system, they don't pay taxes. Like the big people, Jeff Bezos, Amazon, like all these people, they either pay zero taxes or pay very, very little taxes because they know how to create the system. They know how to make it to where they're not paying a lot. So there's ways. I do think that the tax system is set up for the wealthy, and it's for us to learn and gain that knowledge. So, like, hey, they're doing it, we can too. Like, we can be able to create these systems and pay little taxes or use it more efficiently. Questions? So you'll see on the worksheets that you have, there are 2 scenarios that I created, and you have the answers for the parents. So you're able to go down. It doesn't look like a 1040, but it gives you the concept, and you can use the tax brackets and then see the answers. There's 4. How many?
3.
There's 3. Okay. There's 3 things that you guys could
Practice
on. So,
visit
questions?
No. Visit 7 Stream. Sorry.
Okay.
Visit 7streamscashflow.com for
Free resources.
For the activities that accompany our episodes. We just recently did one on John D. Rockefeller. And there is a visionary versus employee worksheet that you can see and see what you fall on. Are you a visionary or you're an employee? You have what mindset do you have, visionary or employee? And then there's other ones that we've done.
But yeah, the worksheets for these are on the
So
website
make sure
too.
you go watch our other videos too.
There's a free tool. I don't know if is it a hammer? The free tool.
Oh yeah, the free money tool, which is just to help you organize your money. We are not tax experts. Ask your tax preparer to help you understand taxes better, and double check what I've said and what I've taught, because
on irs.org.
Because I will make mistakes, or even Google, like, go research whatever I've said.
Yeah.
I think there should be comments on whatever we're posting this on, right?
We should have comments, yeah.
So if you see anything that...
Yeah, let us know if we said something we we got something wrong, what you want to see more videos of, me teaching them, and
Make
so
sure to
that
go watch our other videos too.
Yes.
follow us.
At 7streams cash
Go
flow.
check. Go take.
Just 7stream at 7streams cash flow on YouTube.
Go
and
take
then-
your final financial health checkup in 7streams cash flow, where you can see how healthy your finances
It's
are.
it's like set up like
from
a doctor checkup.
Doctor Araceli Chavez.
Financial doctor.
I don't know.
Okay.
I don't know how I could be called a doctor. Can I be called a doctor?
Do you want to be?
No,
called
because you have to have a doctor. I don't know if that's
You have to have
a what?
it? Okay.
All right. Well, anything else? This has been the Mom and Kid Show. We will see you at the table.